regarding the bank's latest monetary policy decision in the context of the bank's outlook for inflation and the overall economy against the background of the economy's performance for the last quarter. After which the floor will be open to allow for the question and answer session. Governor, over to you.
Good morning and welcome to Bank of Jamaica's quarterly monetary policy report press conference. Earlier this week, the Monetary Policy Committee deliberated on the bank's policy stance against the background of low domestic inflation, continued growth in the Jamaican economy, a sound external account, and record high levels of reserves. The deliberations also considered the uncertainties in the global economy. From those deliberations, the MPC determined that the current stance of monetary policy remains appropriate to support the containment of inflation within the bank's target range of 4 to 6% over the next 2 years. As such, the committee unanimously agreed to 1. Maintain the policy rate at 5.75% per annum, and 2. Continue to pursue measures to preserve relative stability in the foreign exchange market. Let me now briefly highlight the factors that informed the MPC's decision, starting with the most recent inflation data. On the 15th of August, the Statistical Institute of Jamaica, Statin, reported that headline inflation at July 2025 was 3.3%, which was lower than the outturn a year ago and below the lower end of the bank's inflation target of 4 to 6%. Core inflation, which excludes the prices of agricultural food products and fuel from the Consumer Price Index, was 4.3% at July 2025, which was also below the rate at July 2024. The significant reduction in headline inflation over the year primarily reflected the impact of a set of temporary factors, including 1. The ending of the impact of previous increases in public transport fares and the non-imposition of new increases. 2. The effect of the reduction in the general consumption tax on electricity prices. And 3. A faster pace of reduction in agricultural prices due to improved conditions in that sector. Inflation has also been anchored by falling energy prices, particularly for crude oil, and fairly stable inflation expectations, which is the inflation rate businesses and consumers expect in the future. The fact that low inflation rate, which is below the target, currently prevailing is being driven by these temporary factors means that inflation will eventually return to the target range once the cumulative impact of these factors subside. The developments in the foreign exchange market were also considered by the MPC. The market recently experienced slightly higher than usual volatility, again due to temporary factors. The exchange rate at the end of June depreciated by 2.5% compared with the rate at the end of December 2024, which was faster than the pace of the previous 6 months. This unsteadiness was particularly evident in April and May, underpinned by temporary factors, including A. Uncertainties about developments in the global economy, B. the movement in the rate through the psychological threshold of $160 to $1. And C, a narrowing of the gap between domestic market interest rates and those in external markets. In this context, expectations about exchange rate depreciation may have increased during the June 2025 quarter. This was indicated by financial actors increasing their net open positions, that is, the difference between their foreign exchange assets and foreign currency liabilities, in response to the changes in their views about the foreign exchange risk. In addition, the dollarization ratio increased in May from the lowest level in the past 5 years, which was recorded at February 2025. This dollarization ratio, which is the stock of foreign currency financial assets held in the system by the public as a percentage of their total financial assets, is also a measure of the public's view about exchange rate risk. The bank's participation in the market has remained broadly unchanged when compared with the last time I spoke to you. Cumulatively, BOJ has sold US $1.2 billion via its BFixit facility over the 12 months to the end of July 2025, compared to $956 million US over the 12 months to the end of July 2024. However, the bank net purchased approximately US $931 million over the current period. At the same time, the current account of Jamaica's balance of payments remains in surplus, reflecting continued growth in remittance inflows and tourism arrivals, despite the policy changes in the external environment. In this context, as at the 12th of August, Jamaica's gross international reserves stood at a historically high and healthy level of $6.2 billion, or 148% of the measure considered adequate. Supported by strong economic fundamentals and BOJ's intervention to smooth out the volatility in the foreign exchange market, expectations have normalized. Since the end of June, the pace of depreciation has fallen and there has been a reduction in the market's net open position. Ladies and gentlemen, the bank remains committed to presiding over the policy of maintaining a flexible exchange rate regime. So long as inflation in Jamaica over the long run exceeds that of its main trading partners, the public should expect that the exchange rate will fluctuate around some trend. Turning to the near-term outlook, the economic outlook remains clouded by uncertainties around the United States policies as it continues to reset trading relationships and to tighten its immigration policies. These developments may slow the pace of economic activity and could cause inflationary pressures in the US, which could adversely affect the Jamaican economy. Against this background, the outlook is for inflation in Jamaica to generally remain below the lower end of the inflation target over the next few months, but to return to the 4 to 6% corridor over the next 2 years. As I noted earlier, the projected lower end breaches will mainly reflect the temporary impact of improved agricultural supplies following the shock of the agricultural sector in 2024, as well as lower electricity costs resulting from the reduction in GCT on electricity consumption. The bank also projects that the first round impact of the increases in tariffs by the US on prices in Jamaica will be marginal. The overall outlook assumes continued low imported inflation, particularly grains and oils, and stable inflation expectations. The current account of Jamaica's balance of payments is also projected to remain in surplus over the near term, and the international reserves are projected to improve further. In relation to GDP growth, Bank of Jamaica estimates that the domestic economy grew in a range of 1 to 2% for the June 2025 quarter due to expansion in most industries. Economic activity is projected to continue to expand in the September 2025 quarter. And for financial year 2025-26, the bank projects that growth will be in a range of 1 to 3%, largely due to the agriculture, mining, and tourism sectors. Subsequently, growth is forecast to normalize in a range of 1 to 2%. Employment levels also remain high, even as anecdotal data suggests that wage pressures are moderate. Looking at the risks to inflation for Jamaica are skewed to the upside, which means that inflation could be moderately higher than projected. Higher inflation could stem from a sharper than anticipated increase in the tariff faced by the U.S. trading partners, resulting in higher imported inflation and elevated inflation expectations. In addition, inflation could be higher than projected if there are further escalations in geopolitical tensions, which could negatively impact international supply chains. Lower inflation could, however, result from lower than projected international commodity prices as well as weaker demand conditions. Ladies and gentlemen, even with the uncertainty and the potential of headwinds in the global landscape, Bank of Jamaica reaffirms its commitment to maintaining low and stable inflation at the 4 to 6% level, and will deploy the tools necessary to preserve price stability. Bank of Jamaica will continue to carefully monitor the incoming data and adjust its policy accordingly. Moreover, the bank's Monetary Policy Committee remains committed to its work program to further strengthen the policy transmission process. Thank you. I will now take questions.
Morning, Governor. Don't you think the heightened political campaigning and wanton spending that we're seeing could cause a demand pull on inflation that could cause a breach, whether of your lower or upper limit?
Well, it certainly would be extra spending in the economy. What is the extent of it? I don't know. Maybe Wayne or Robert could comment on how many billions it would take to have actual impact on inflation. But I suspect that it will be passing and it will be temporary.
Wayne or Robert?
No, you have to look at what's happening to the overall fiscal performance. You can't just simply look at one aspect of the fiscal accounts. And so far, for the first quarter, the fiscal deficit is in line with budget. When we project ahead, we expect that the government will meet its fiscal targets of roughly a balanced budget for this fiscal year. So, as we've indicated, certainly from our assessment at this point, we are not seeing any risk to inflation that's coming from fiscal policy.
So there's no concern to be had?
Not at this point.
I was looking for Deputy Mr. Roper. I'd wanted to get an update on the Twin Tower project. I'm not sure if you or anyone at the head table can answer.
You mean the additional office
Yes,
space?
no,
that
not
we're-
Twin Peak, Twin Tower.
Yes. Work continues on all of the preliminaries that have to be done. The design, getting approvals, speaking with UDC, who are the planners for downtown, all of the engineering stuff, because remember, the engineering to build a tall building downtown is quite complicated. So all of that work is continuing, and we expect that in the first quarter of next year, we'll have a better understanding of where that work is and when actual groundbreaking can take place.
What about RFP? You mentioned that you're looking at international tender. Have that gone out?
International tender for
I think it was a design.
George would have to answer that, I'm sorry.
Okay.
We have a question from Siobhan Campbell. What is the harm if inflation lingers below the target range for an extended period?
That would be quite a phenomenon. We don't expect it because what has put it there is stuff that is temporary. So last year, remember, we had an increase in public transportation fares, and if this year we don't and that number drops out, it brings down the inflation rate. But that will be a one-time effect. Also, if there are any other temporary effects, there like the GCT or the electricity, that will fade as we go along. So I don't think we will stay below the lower level. And if we did for longer than we expect right now, we would have to assess what is causing it and make a decision at that point.
Good morning, Governor. Governor, can you perhaps comment on the ensuing controversy in the U.S. between President Trump and the Chairman of the Federal Reserve, Jerome Powell? And can you speak a little bit about the independence of the central bank here in Jamaica, particularly vis-a-vis what's going on in the States?
I must say I don't have a comment on Mr. Trump and Mr. Powell. But I can say that people will recall that in April of 2021, Bank of Jamaica became an independent central bank. And what did that mean? That meant that the execution of monetary policy and supervision of the financial sector became the purview of Bank of Jamaica only, with no intervention in its operations from government officials. Our board has no government official on it. We have an independent monetary policy committee made up of no government member, and we have a supervisory committee and a financial policy committee, which again has no government person on it. And those two committees make big decisions in respect of monetary policy or supervision. We're sufficiently funded that we can take any market actions that we consider to be appropriate. We are not subsidized, or there's no subvention from government for the Bank of Jamaica, so we're financially independent.
Let me put it another way to you then, probably a bit more diplomatically. Should the legislative or executive branch intercede in forming monetary policy? And should they ever say in determining rates?
Well, there is a point where we have a general discussion on the economy as a whole. Where is it going? What does it take to move it ahead? And we settle those issues, is it once a year when we look at the corridor? So that 4 to 6% corridor is a joint discussion between ourselves and the government, the Minister of Finance in particular. And we advise on that decision about that corridor. But apart from that, we take all the decisions on our own.
Thanks, Governor.
Okay, we have a question online from Dashan Hendricks. Go ahead, Dashan.
Not here.
You hear me?
Yes.
Okay, cool. I'm just referring to the IMF's Article 4 consultation report that came out in June. And the IMF praising the Bank of Jamaica for its inflation targeting regime, along with the strong international reserve position and stable FX markets serving Jamaica well. But it says mention. Can I get a reaction from you first and foremost on that note from the IMF? Specifically, Governor, specifically scaling back foreign exchange intervention and that part.
We're always judging whether the policies that we currently use remain appropriate going forward. And so far, we believe that the current policy of intervention is appropriate. So as you know, every time there's a sale and a purchase in the foreign exchange market, Bank of Jamaica participates by buying a percentage of that amount. So every day we are buying in the market. That allows us to build up a fund that we can deploy back into the market if and when we feel the market is acting erratically. And it has been our judgment up to now that this is the best way to move forward, rather than allowing the market more and more to make the adjustment by themselves. We believe that participating in it at odd times is the best process. That doesn't prevent us from accumulating. And as you see, we have accumulated nearly $1 billion in the reserves over the period, and that comes from participating in the market. So although we are selling into the market, we're also retaining for the reserves.
Governor, for the better part of a year, you've given the signal that the commercial banks should take the lead on our reducing rates. They remain intransigent, bullheaded. What do you say now, after a better part of the year?
Well, we did see, was it in the last quarter, we saw some dip in rates. When we look at rates in an aggregate way, we did see some dip in rates, both on the deposit side and on the lending side. So if that is the beginning of a gentle trend downwards, then we are very appreciative of that. But we are in a market economy, and we do have a situation where the financial sector has two dominant players, and to the extent there is not further competition, then you will find that the market is not driven entirely by competitive impulses. But that is one of the key issues that the Monetary Policy Commission has said to us we need to do all we can to fix, and hence our efforts in trying to create a EKYC system to make it easier for customers of banks to move from one to the other if they feel.
Late, do you think, in your opinion, that is?
Well, as we go along, we learn what works, what is deficient. Remember, we're just since April of 2021 and through COVID, which was an abnormal period, experiencing and trying to run monetary policy through interest rates. So it's a pretty short period that we have been doing this, and it takes a little bit of learning to get up the curve. So I'm satisfied with what we have done and the lessons that we have learned and what we need to do in the future to make it even better.
Governor, there is validity in the argument about additional players coming in the banking sector, hence rates will come down as a result of competition. But in absence of competition in the market, what else can be done? Because the IMF spoke about it in their June report. The public out there are clamoring for rates to go down. Last time we spoke, I asked you the question. You mentioned that you would be meeting with the banks to speak on the matter of your dissatisfaction in the transmission rates. I heard you saying that there is some marginal movement that has taken place and you're hoping that this is a start of others to come. But in the absence of competition, what can you do? What can the bank do to help those customers out there who are clamoring for lower rates? And you mentioned something, I want some clarity. You mentioned about a narrowing of the gap in the domestic market interest rate with those in external market. Is it that those rates in the international markets are coming down while ours are static? Or is it that both are coming down?
Start with the latter question. The Fed rate in particular is not coming down, or has not come down in several quarters, certainly many months. And that makes it quite attractive to investors, not just in Jamaica, but globally, to invest in Fed instruments and treasuries. And that is of some concern to every economy that has a floating exchange rate and a free foreign exchange market, because individuals like yourself and others can make a decision as to whether you want to accept the domestic rate or you would prefer to have a US rate. To the extent that our rate is 5 3/4 and the rate in the US is 4 to 4.5, that's pretty close. And that means some investors may prefer to be on the US side, given the differential in inflation between ourselves and them. Remember, they have run inflation in the last couple of months below 3%. And ours has been, apart from the last 2 months, over 4%, nearer to 5. So people may make that decision. And that is something that we have to watch. It's not the most important thing for us when we make up our minds in respect of interest rates, but it is a consideration that we have to take into account. What can we do? There's no short-term solution to trying to get the banks to reduce interest rates. The banks have said to us, we have some issues that we have to resolve in order to make our rates come down more quickly. Some of those issues have nothing to do with us, and our recommendation to them is please address those issues as quickly and as strongly as you can, because we do want rates to come down somewhat. I believe, and I'm hoping, that in the last quarter of this year we will get relief rate side.
We have a question from Siobhan regarding the implementation of JamDex. Has there been any increase in interest for a digital currency?
Thank you. Good morning, all. Yes, we have seen since the start of this year more interest in JamDex by the individual users who do what we call P2P, peer-to-peer transactions. The data for the quarter ending June shows, like, in terms of value of transactions, about a 30% increase in the value of transactions. Of course, that is partially due to BOJ now actively pursuing the communication and the events in terms of persons using JamDex. So we have moved from brand awareness to more transactions-oriented events. We were very big for those who were at Sumfest, very big there, and that has contributed to the increase in terms of merchants accepting it and individuals using it. I should add here that we are still working on getting the point-of-sale machines for the larger merchants retrofitted. We are doing that in collaboration with the banks. The solution is working, it works, but it's just to have it retrofitted, and we're waiting on the banks. Also waiting on other wallet providers to be onboarded. 2 are onboarded and are distributing JamDex, and we expect 2 more before year end. Thank you.
Okay.
Can I just have a quick follow-up? What can be done to generate more interest or a greater awareness in the public consciousness about using digital facilities?
Okay, overall digital?
Yes.
Just consistent communication, Al, in terms of from BOG and from persons who provide other digital means of payment. The banks, and we have payment service providers there, those are actually testing card, wallets, and prepaid cards in our sandbox. So it's just to actually communicate more on that. We have ramped up the communication on JamDex for those who are on social media. I'm sure you have seen it. Employed additional staff to support that, because when we were using outsourcing, it's very costly, so we now have staff on board dedicated to the promotion of JamDex, and I'm sure that in terms of digital products on a whole, that will also be included.
But if I could add, the breakthrough with JamDex will happen when we get the POS machines converted. That's when we will see a much more rapid spread of use. If you think of yourself, you know, if you have a wallet full of JamDex, unless you can spend it at places that use a POS machine, you have to resort to cash, or you have to use your credit and debit cards. So it's critical, and the commercial banks know the POS machine conversion is what is holding up the effective and massive rollout of JamDex. And a lot of the problems that people are experiencing at ATMs to get cash can be addressed over the years when we get JamDex rolled out.
Thank you, Governor. The last question goes to Dashan.
All right, thanks. I probably have 2 questions, but I just want to clarify a bit what the governor said at the end of the question that he was answering from Durand. At the end, I thought I heard you said by the end of this year, we'd be seeing some relief in exchange rates. Did I hear you incorrectly? And you should have said interest rates and not exchange rates?
I believe that but in the end, in the last quarter of this year, we are hoping that we will see some easing of interest rates. But that depends.
I'm hardly hearing.
Many things. Go ahead.
No, I said I'm hardly hearing.
I'm saying that it is our hope that in the last quarter of this year, we will have conditions that will allow interest rates to start to come down again, meaning the policy rate of BOJ and hopefully the commercial banks too.
Okay, all right. The question, thanks for the to the extent where you have achieved your objectives in terms of inflation targeting, I'm getting back to the exchange rate and the impact that can have on inflation. And using the BFIX since 2017, based on your own data on the Bank of Jamaica, spent at around $5 billion. You can correct me if I'm incorrect, trying to defend the currency. But the IMF, coming back to it, saying you should reduce it. I know you answered that, but how pleased are you with what you have achieved using that to manage the dollar so that you don't have inflation getting out of the range in which you want it to go? That is one. And the second question, since it's the last question, is just with the JamDex. if banks are in this thing to make money, and if they would have seen the JamDex being beneficial to them, I would believe they would have gone out quickly to change the POS machines to get it. I mean, they're there to make money. If it makes them money, why wouldn't they go and do it as quickly as the BOJ wants them to do it?
Yes, although JamDex may not make them money, JamDex offers the opportunity to save them money. It is a very costly exercise to handle cash. Banks will tell you that a big part of their costs have to do with the security, moving, storing of cash. And it's the same thing for businesses too. So both the banks and businesses have an interest in digital payments. So even if there is no fee to be earned off of JamDex, which is not entirely true because we have accepted that there will be a small fee, there is a very big case of cost savings which they will eventually reap over time. Remind me of the first question, Dashan. Fix it.
Yeah, it's spending $5 billion over the last few years, and the IMF telling you to reduce your intervention. But I'm asking you from your perspective, how pleased are you with what, maybe that question's a little bit loaded, but how pleased are you with what the BFIXit has achieved in terms of your inflation targeting?
Okay, so I want to say something and ask Wayne to address it in greater detail. I think you have to look at how has that exchange rate moved over the period of time, and you have to measure that against inflation differential. So when you look at our inflation rate and the United States inflation rate, you'll see that the differential is quite similar to how the exchange rate has moved. By and large, and I would say certainly in the last 5 years, the exchange rate has moved by 1.5%, 2% a year, which is the differential between United States inflation rate and our inflation rate. So I would judge it on that basis as performing very well, because it is keeping us competitive, but it is not, creating havoc. It is not sending the exchange rate through the roof. It is not holding it down to be uncompetitive to exporters. So by that measure, it seems to me that it has been successful. Wayne?
Yeah, just to follow on and echo what the governor is saying, it has been successful. We must remember, I mean, although the foreign exchange market has grown appreciably over the past 10, 15 years, it is still a small market, one. Two, the flows into the market are very lumpy. So it's a market that is very subjected to huge swings, one, and it's a market in which any little movement can end up being very destabilizing. So the central bank in a market like this have to be very active on both sides of the market. We have to be buying and we have to be selling. The BFIXit mechanism is just really an auction system. That's all it is. That has allowed us to undertake our sales of foreign exchange. Many years ago we used to actually buy, but we have pulled back on that and instead have relied on surrenders. But certainly in terms of selling foreign exchange, it has just provided, first of all, a very transparent means by which the bank actually sells in the market. So the bank doesn't, behind closed doors, determine, I'm going to sell at X price. The entire market knows what we're doing. They know the rules of the auction. So it's very transparent. But also importantly, being an auction mechanism, it allows for what we call price discovery. In other words, it enables us to sell at rates that are not far off from the market, at rates that are actually consistent with what the market is saying. Because if you try to do that, over time it's going to become self-defeating. So as a mechanism, as the governor says, it has worked very well. We continue to review it. The market operations team, they meet regularly with the dealers and the players in the market to review not just market dynamics, but how the system is working. And whenever necessary, we will make tweaks and adjustments to the auction mechanism. But it has been working and achieving what we have, what we had set out to do when we implemented it.
All right, thank you everyone for joining us this morning. We know that there are others who have more questions. I'm asking that you send those questions to us by email, and I'll ensure that they're responded to you in a timely manner. So thank you again for joining us. We hope you enjoy the rest of your day.